here's something that should make every crypto investor sit up and pay attention, because when September closes green for Bitcoin, like this one just did, October, this next month, historically delivers an average gain of 21%. So what is the chart signaling to us? Well, it says the catalysts are lining up and institutional money is positioning itself like we have not seen since early 2024. Multiple tailwinds are converging at once, as we've been talking about in my last few videos. What we are experiencing is truly historic. Each catalyst that we see moving and locking into place is significant all on its own, but together we're looking at what could be the perfect storm setup for Bitcoin and crypto heading into Q4, which we know historically has been a bullish quarter or few months for Bitcoin and the crypto market. So today we're breaking down this data. We're taking a look at the flows and the narrative shifts that are happening right now. There's no hype, just the framework for understanding why the next few months could reshape our portfolio. So let's dig in, guys. So as we get started, let's lay the historical framework that will help us understand what's going on. We read from Kobesi letter the following. They say, when government shutdown scares create market dips, as we saw, those dips get bought back 85% of the time. And we're watching that exact pattern that they're talking about play out right now as Washington grapples with funding battles and political theater, or whatever you want to call it, following today's shutdown. Bitcoin has built a reputation as a chaos hedge, not because it ignores traditional market stress, but because it responds to institutional dysfunction in a very unique way. When confidence in government spending and monetary policy waivers, Bitcoin becomes the alternative. It becomes the hedge of security because it's the only asset essentially that exists outside of the traditional system. No one owns it. Every shutdown scare, every debt ceiling debate, every moment of fiscal uncertainty reinforces its narrative as pure money for the people by the people. Now, if you've been in crypto for some time, you would know we've seen this script too many times. Panic in the headlines, retail dumping. Meanwhile, institutions slip in quietly, one could say it's maybe coordinated, scooping up assets at a discount. Then, almost with no warning, the market snaps back, just like it did this week. That's the pattern, guys. And long-term holders know how it ends. And if you're here tuning into my channel, you now have this edge as well, because I've been through past cycles. That's the pattern. And long-term holders know how it ends. What past cycles have taught us, and what my own experience, having been through the past bull run, has taught me. Because the goal is always to learn from other people's mistakes and advantage, and not have to exhaust and waste our own lives and our own resources in learning mistakes the hard way. Except this time, there's a twist. The pressure building beneath all of this political media drama surface is unlike anything we've seen before. And when all this pressure explodes, as it will, the snapback may not leave much time for anyone still waiting on the sidelines. That's why I really do hope you're already allocated into whichever crypto tokens you have the most conviction in. And I saw many of your comments. Thank you for letting me know. Most of your holdings I love as well. So that is really great news. But if you are on the fence, please let me know which tokens you're on the fence about. And yes, we're still going to get into Aster. But now let us take a look into the tailwinds that are stacking up. We see Delphi Digital recently outlined 5 major catalysts that could reshape capital flows into Bitcoin and crypto across the following months. And each one represents real money, real flows, and real structural change in how institutions can access digital assets. So let's break them down. First off, we have pensions. For years, pension pension funds operated under restrictions that made crypto allocations difficult or nearly impossible. For decades, retirement funds managed under rules that essentially shut the door on Bitcoin. And that door is now finally cracking open. There are new frameworks that suggest pension funds may be able to allocate in measured doses. So when you're managing tens or hundreds of billions of dollars in retirement capital, as these pension funds are, even a 1% allocation or tilt towards Bitcoin translates into monumental buy pressure. So we're not talking about retail FOMO here. This is patient, steady, long-term capital that doesn't panic sell on every 15% correction. So once again, this layer of mass adoption at the pension fund level of things reinforces the entire Bitcoin market, which fundamentally is the foundation for the crypto market. Second, we see the gold to Bitcoin ratio rebalancing. Institutional for centuries, gold was the hedge of choice against inflation and currency debasement. But Bitcoin carries something gold never could. That is digital portability, instant divisibility, and 24 hours, 7 days a week global settlement. Institutional allocators are beginning to shift a fraction of their gold holdings into Bitcoin. A 5% reallocation of institutional gold alone would mean hundreds of billions of dollars flowing into this market. Not to mention, Bitcoin is actually scarce. Gold, we know, is a mineral that can even be mined in outer space, whereas Bitcoin is programmed and is scarce by nature. Thirdly, we see MicroStrategy, now just known as strategy. We see their potential inclusion in the S&P 500. Can you imagine? Nothing is guaranteed, of course. But if the index committee pulls the trigger, trillions in massive funds tracking the S&P 500 would be forced to buy. Overnight, Bitcoin exposure would be baked into millions of retirement accounts through Mr. and the flows would be automatic, mechanical, and absolutely massive. Fourth, let's take a look at money markets. There's $7.3 trillion parked in US money market funds. And as the Fed cuts rates, those yields compress. Managers start hunting for returns. And historically, that money rotates into equities, real estate, or other alternatives. Now, Bitcoin sits firmly on that menu. And as the opportunity cost of holding cash rises, Bitcoin's multi-year return profile makes it a serious candidate, even for conservative allocators. Now, the fifth catalyst lies in corporate balance sheets. Strategy just announced it won't face CAMT liability on unrealized Bitcoin gains thanks to new IRS guidance. That is a complete game changer because for years, US companies hesitated to hold Bitcoin because of tax and accounting risks. Now, however, the Treasury is effectively saying you can stack sats on your balance sheet without triggering penalties. That shifts the conversation from should we hold it to what's the best way to hold it. Each of these on their own would be significant. And today, together, they form a tidal wave, a tsunami, I would say. So this is the structural change with real flows attached to them. The question isn't whether tailwinds exist, okay? It's how fast the market prices these in. Now let's shift gears a little bit and talk about stablecoins and how they are affecting the economy and the crypto market specifically. Because as we covered in my yesterday's video, right now we see Stripe's bridge unit is applying for a federal charter. That's one of the biggest payment processors on the planet, moving to hardwire stablecoins directly into the banking system. And if they succeed, millions of merchants plugged into Stripe could suddenly be settling in stablecoins instantly, globally, and at a lower cost. Visa is right behind them too. Their Visa Direct pilot now allows businesses to pre-fund cross-border payments in stablecoins. The friction between traditional finance and crypto rails is melting away in real time. Instead, they're just creating a bridge. And at the retail user level end of things, Phantom just dropped Phantom Cash, which is instant bank funding, a Visa debit card, and zero fee conversion into stablecoins. That's a payment system anyone can use. We even Here from Moody, they are sounding alarms about what they're calling cryptoization risk. They worry about reserves and redemptions, which I guess, based on their knowledge level, could be a legitimate concern. But what's interesting here is that the simple fact they're issuing warnings tells you something. It tells you stablecoins are already systematically important and infiltrating at a fundamental banking level, that this would even have to be a conversation. So it's a very, very strong signal is what it is. And here is the connection. Stablecoins are rails, the highways, but the reserve asset that gives those rails weight, as I was saying a moment ago, is Bitcoin. So the more stablecoins flow, the more Bitcoin rises as the non-sovereign base layer beneath the system. That is truly good for the people because it's not linked to one nation, to the US's interests, as much as I love the US. It's not linked to Russia. It's not linked to any country. It's truly pure money, which is what makes me personally so happy about what I see going on in the world right now. And I actually heard a quote from Charlie Kirk saying that speed doesn't matter. It only matters if you're moving in the right direction. And right now, we see that this infrastructure that ultimately benefits Bitcoin and Bitcoin's mass adoption across the world and is being built so fast, which is only more powerful considering it's being built in the right direction, as Charlie was saying. Now let's talk about what factors we see going on in the market and in the world that validate the narratives we support here at my channel, which are real ones. We can take a look at some key points or checkoff lists that actually Miles Deutscher, is a fantastic channel, laid out simply for us. He says, are institutions buying? Are flows rising? Are products launching? And are both retail and institutions leaning in? If we run that commonsensical checklist up against Q4 and what we see happening as we enter into Q4 of this year, we see that every box lights up. Institutions, pension funds, family offices, and asset managers are opening the door. Flows, on-chain data shows steady accumulation. Products, ETFs, corporate treasury strategies, stablecoin rails, all alive and ticking the box. Now, insofar as retail, well, they're also starting to wake up, while institutions are already seated at the table. Now, let's look at the facts that validate we're on the right track record here. We see that Binance altcoin volume just hit 82.3% of total trading. That's risk appetite rising. It's capital rotating out of Bitcoin and into altcoins when confidence is rising. The difference today is the quality of the flows. It's not going to meme mania. Thank goodness. It's going into DeFi protocols with revenue, scaling solutions with real users, and infrastructure solving actual bottlenecks in the way the economy functions. So when we see narratives aligning with flows, the price always follows. So this is what is confirming to us in backing the DeFi narrative. It doesn't happen instantly, but it does happen inevitably when all these factors we just went through line up. You just have to think about it. Now, it's important to remember that the market is a live thing, okay? It's comprised of all of our emotions, essentially. And it takes time to price in structural change. So that lag in the market, or all of us together catching on to, oh, this is what's going on right now, that lag is the opportunity window that we have to get in position before everyone else wakes up, which is what I think is so valuable of the information I bring you on my channel, because I try to explain the shifts that are happening in the climate, in the wind, who said what, who's doing what. And I try to help us all make sense of it so that you can see the opportunity and get in where it makes sense for you. That said, let's talk about portfolio positioning, and more specifically, what is known as the barbell strategy. Because one could ask, and maybe you've asked yourself this, how do we position ourselves for what's coming next? One of the smartest frameworks is what I just mentioned. It's the barbell framework strategy. The easiest way to understand how this works is to literally imagine a barbell like you were at the gym, okay? On the one hand of your weight, your barbell, you have Bitcoin and Ethereum. And you could argue even all the blue chips. They're liquid, they're institutionally recognized. That's a criteria you have to check off on your list. And they've got the regulatory clarity that makes big money comfortable, because that tells you big money will continue to invest in them. Now, It's important to remember that these investments, these blue chips, Bitcoin, Ethereum, your Solana, your Sui, etc., they won't give you a 10x a month. So you can't think of them or consider them because of like how many multiples they're going to get you and how fast. Okay, these are anchors. They allow you to survive every correction and still capture the upside. They've proven this through their track record. They're long-term investments. This is like your retirement bucket over here. And on the other side of this barbell that you're holding, as if you were at the gym, are your smaller, higher conviction bets. Some of your degen calls, if you want to call them that. Now, in this bucket, for now, we have even DeFi protocols with real revenue and apps that are gaining users by the day. So I wouldn't completely say it's your degen pool, okay, of investments, but they're riskier because they just don't have as much of a track record. You just don't know if these teams are going to, like you just don't know these teams very well. Someone can be fantastic, but if you've only known them for like a few days, or a few weeks, even a few months, I would say even 1 year, you need to know someone for some time to know who they really are. And only challenges bring who someone is to the light. We all know this, right? So your investments have to be treated and thought of in the same way. You have to see them go through a hack, the way we saw FTX and Bybit, right? FTX proved itself through its challenges that it was corrupt, right? And Bybit, on the other hand, hardly even flinched. They had a treasury. It's like they say, it's when the water goes down, you see who's wearing swimming trunks or a bathing suit, right? So it's only through hard times that you're able to see what something is made of. So having that in mind, you put those types of investments into this bucket. Now, the narrative or the investment thesis or the promise of being the next, like Aster, being, being better than Hyperliquid, or all of these projects, new layer ones, as we covered the other day, they have a big promise. So that's the high return potential, but it hasn't proven itself yet. So you put those high risk, high reward investments at the other end of your investment barbell. So these are asymmetric bets. A small allocation can swing an entire portfolio when they hit. And in the middle of this barbell, okay, blue chips over here, your high risk, high reward investments that still hit off specific checklist, right? Like key points. Well, in the middle, you have a mix. Okay, and this is really a personal call. It depends on how much extra capital you have, how risky you want to be, your personality type. Some people don't like to gamble at all, and some people love to gamble. So in this middle section, which is a very personal part of your investment strategy, would hypothetically, depending on your profile as a person and investor, would lie a mix of mid-tier alts that have no revenue, for instance, governance tokens nobody uses, and narratives perhaps that have already played out, like the NFT narrative, meme coins, etc. High risk, zero expectation type investment opportunities or gambling opportunities would go in the middle. And typically, this middle part of this barbell strategy is where portfolios quietly bleed. It's dead weight. That's why you really have to put like so very little into your gambling bucket of things if you're going to go ahead and do it. That said, this whole barbell strategy I just explained to you isn't about avoiding risk, unless you want to avoid risk, in which case just buy the blue chips, like that's it. But if you are going to allocate some of your capital to the more degen plays, and for this very asymmetric strategy of high risk, high reward, and you're okay with losing all that capital and not crying about it, that's key. Then this barbell strategy is about putting the risk where the upside justifies it for you. So don't go do what your friends are doing. This is a conversation to have with yourself and decisions you have to make and sleep with every day. Now, assuming you go ahead with this barbell strategy and you have your blue chips here, your more asymmetric bets here that do, check off specific criteria for smart investments, et cetera, the strategy that makes this a winning strategy is that as your more high risk, high reward asymmetric bets on the other side of the barbell go up in value after you have already paid yourself back. That's step number one. Step number two would be every time there's a pump, an additional pump, okay, you take that money and you put it back into your blue chip tokens that are your retirement fund, Bitcoin, Ethereum, Solana, Sui, etc. So that's how you ride a liquidity wave without getting crushed when it breaks. So hopefully that was helpful, a little enlightening, maybe just a good reminder as to how to approach crypto investing, especially as we move into October, which we know is historically bullish. That said, guys, as we wrap up today's video, just remember that September closed in the best ways we could have expected. It closed in the green, and we see capital is already shifting into place, which is another validating signal. We're about to see a bullish run this quarter. We see rails are being laid and institutions preparing for a new market structure. That said, it does not mean there may not be another correction. That's just part of breathing in and out, right? Up, down, up, down. But it does mean that overall, we're looking at a bullish quarter. And we see stablecoins stepping into the role of global payments, into the very backbone of it. And corporates are moving from questions about Bitcoin to strategies for allocation. This is an environment of acceleration, and the market is setting up for expansion. And the strongest hands this bull run will be those whom hopefully is you that move with intention, see the opportunity, know themselves, know their strategy, and move before the headlines catch up. That's always our opportunity. Move before institutions catch up. Move before the whales catch up. And here's the real takeaway. The perfect storm builds quietly, and then it unleashes with force. And right now, the floodgates are opening, and those ready to act early are the ones who ride the wave. So stay plugged in, stay prepared, and when the shift happens, you will already be in position to take advantage. And I will be here to tell you what I see, what's happening, and help inform your next moves. I love you guys so much. Have a wonderful day wherever you are, and I will catch you in my video tomorrow. Ciao.